Okay, so this is a video of the order flow. I'm trying move move it so I will draw it as it progresses. So as whenever you come up to your chart, what do you do? First of all, after you've done your analysis from say the higher time frames downwards, and you know okay where you are in relation to the moving average, the 20 period 20 period moving average. What do? You okay, for example, you come to your chart and this is what you see. Price is falling here like this. Price is falling. What do? First thing you do that you note is that okay, we're in an uptrend, price is falling. Then what you do is that you note a point, and that point now is, I'm sorry, please let me draw that again. You note a point, and that point now is here, is this point here, the point at which price starts to go down. You mark that point. Then as is progressing, you also notice that price starts to go up. When it starts to go up, you mark that point with which it starts to go up. Now for that current time period, you don't know what's going to happen next. You mark it that okay, this is the high, this is the current order flow. You mark the point at which it goes down, it starts to go down, and the point at which it starts to go up. So as the trade progresses, as the chart progresses, you're not in a trade yet because the order flow has not changed. So now looking at here, we saw this point, it spiked, it dropped, it dropped, it dropped. Now here at this point, one will be tempted to enter a sell trade, but it will be high risk. You can enter at the same time, you can enter here, but your stop will just be above this. It will be, you have a small stop. You can enter at this point that it will go down with a stop above here. It's not much. That's about say 20 pips, 20 points. It's not much, but nonetheless, we are not in the business of picking tops and bottoms like I always tell you guys. So wait, if this, what we are concerned, since we are looking at crash, what we are concerned is that we are looking for the order flow to break to the downside. When I mean order flow breaking to the downside, I mean this last level which price starts to go up. I need that level to break. If that level starts breaking, our trading below, then yes, the order flow has changed and I'm interested in selling. So now this up line here is the point at which price starts to go down. That is the resistance, this is the support. Simple, but I just call it order flow. So now if this level breaks, what I mean by break, it closes above the level, chances are we are going higher. Price might come back, retest the level, and will go higher. And that is exactly what happened here. Although it didn't come back to retest the level though, but that is what happened. Price broke the level at this point and we went higher. So it was going higher, 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 higher. Then all of a sudden we saw this crash, piam. We saw this crash here. This crash was at the level, was at the moving average on the 4-hour. This particular crash here was at the moving average on the 4-hour. So now when that crash happened, you might enter if you want to, but again, where would your stop loss be? That should be the question you should ask yourself. If you say you want to enter the sell here, now your stop loss should be above this level to be safe. Above this level is about 70 points. So for me, I'll just leave it and wait till it breaks this moving average and I look to sell the retest. So this order flow here, this point here becomes, this order flow here becomes irrelevant for the time being. It becomes irrelevant. You can ignore it, you can remove the lines, you can cancel it, you can do whatever you want. This box, the order flow here, becomes irrelevant. Although as time goes on during the day, the price might come back to retest it or do whatever, but we are not concerned. We are looking at what we are seeing currently. on our chart. So next, as price goes back, price stalls. After the crash, it went up a little. Now we can say, okay, I'm sorry, please let me get this here. You can see that this level here is your new order flow. So you are looking for this level to break, and yes, this level broke. Did I get that? That level, okay, it's not so clear, but you can let me see if I can zoom it. Can I? Okay, yeah. Oh, I messed that up. Come in, please. Oof. I'm sorry about that. All right. Okay. So here the level it starts to go up, then it comes down. It crashes again. Now we are below the moving average, which is our blue line. We are below the moving average. Our system says, okay, when it gets back to the moving average, we sell. So ideally, this is where our sell point. This point here, this 97.75, blah blah blah, that will be our sell entry for it to crash further. It did crash, so it came back up. I entered here with a stop, with a maybe 30 pip stop. Our stop was never threatened, then it crashed again. So as it crashed again, now you can mark this level here as your current order flow. Are you getting it? So this is your current level of order flow. This is your current level of order. This level, I know we won't see that other side. So as it starts to go up, you mark here that is your current level of order flow. This point here, that is your current level of order flow, and here. So if price breaks above this point here, you can say, okay, we are going higher, but it didn't. Instead, we came down back. We didn't break. It came up, came back. It was just dancing around that point. It broke finally around here, then came back. Next candle, it came back inside again, and continued higher. So now the order flow now has changed once more. So this order flow becomes partially relevant. Then we mark the point at which price starts to go down, and that is where is that? And that is here. This point here. This point is the last level. Well, you can arguably say that, okay, there was a point here too also. There was a point here also, but remind you, it's inside another point. So that I might not give too much relevance to this particular point. This is the point I'll be looking at. So price went above, came back, retested. Chances are we haven't going higher. Of which price came back normal level. Normal thing price is very, you can't decide, you can't see. So it breaks this order flow, but instead the 20 period moving average hugs it and it stays there, and the price is respecting the previous order flow because the last level was this point here. It breaks, comes back to that level, and it moves higher, The order flow has changed again. We break the last level where we started to come down from, which was here. Price went higher, came back, retested the level and broke it. Then finally, what made me even start looking at this trade was here. Was at that point. So price broke the point. This was our was the level which it started to go up. At this point here, it started to go up, came back down, then it crashed. It crashed here. When it crashed here, then it was confirmed that, okay, the order flow has changed. The chart is below. This indicator below has already crossed, so it has changed. So at this point, you'll be looking for a sell. Wherever you might take the sell at the level, or you might take the sell at a higher level. So I think I waited, and I took the sell at about 802 level around here. So I waited for 15 minutes. After 15 minutes close, I took the sell. Then that's when it started crashing. So at that point, the next level of order flow would have been here. So if I took a sell at O2, I'll be waiting for this level down here. If I took a sell here, I'm waiting for this level down here to break. If this level breaks and price closes below, chances that we're going down, of which that was what happened. We came back, touched the level, came back, spiked higher, but we didn't close above. Then it continued, then the other flow changed again. What I mean by the other flow changed again, at this point price started to go up, but here price broke that level again, so other flow changed to the downside. So it was one-way traffic for the downside. So price came here, the other flow broke again, downside and downside, and it went. So about my trade, I think I took the trade at 802. This was where I took the trade. Then price came down. I saw 50 pips. I think 50 pips on there. Then price came back. As price was coming back, I already moved my stop loss to plus 30. So it just came back up and stopped me out. And the next minute I saw was flap. It was just came down crashing. So basically that's the order flow. The order flow is simple. You mark the point at which price starts to go up, and you mark the point at which price starts to come down. Not the wicks, the body. Not the wicks, the body. All right, thank you.